U.S. is still the best house in a bad neighborhood, and our bonds went up in 2008 crisis, 45% Treasury bonds, 30-year Treasury bond, and they're going to go up more than that this time.
Why are you excited about, not excited, but you confident in bonds is a thing?
Okay, what happens? So all of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all this stimulus throws money into the economy. What do governments do with this stimulus? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate, because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they tried to pump it up and it's failing anyway. So financial assets keep falling. So the money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people. Again, real estate's gotten just as overvalued as stock. The people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. It's the safe areas. It's the US Treasury bonds, which is the best bonds in the world. Other government bonds are good. Nothing's going to beat a 30-year Treasury bond, and nothing's going to beat in the real estate area, multifamily, rental real estate, because people who are thinking of buying and it's overpriced, and then they see the prices fall, they're going to be more scared. So renting will.
Yeah, so Harry, the big distinction is, there was a thing called junk bonds and this bond and corporate bonds and all that. So you're saying government backed, like the U.S. government.
Yes, AAA corporate, and in the world even, who's the best house in a bad neighborhood? Already been through. Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes, okay. U.S. is still the best house in a bad neighborhood, and our bonds went up in 2008 crisis, 45% Treasury bonds, 30-year Treasury bonds, and they're going to go up more than that this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times, from real estate, and that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. Now here's my number. From 600 trillion worldwide, they're going to have to come back down to about 250 to 300 trillion. Now, think about that. Globally, 3 times global GDP 95, $300 trillion, give or take, 250 disappears in financial assets and doesn't come back for a long time. That's the big news in the next coming years. So as long as you're protected from that in the right real estate, and in the right bonds, the highest quality, longest term. If I could buy one thing, it'd be a 30-year Treasury bond.